While there are loads of reasons for businesses in various industries not lasting more than a couple of years, one of the top reasons is lack of money or capital. Cash flow problems can be a major challenge for businesses, especially in the early stages when revenue is not yet consistent. Businesses may struggle to pay bills, make payroll, or invest in the growth if they don't have sufficient cash reserves or access to funding. Now, there are other causes of business failure. If there is no market demand for the product or service, they will struggle to attract customers or generate revenue. Or you don't differentiate yourself from other businesses similar to yours, or fail due to poor management, including lack of leadership, ineffective decision making, and poor management can lead to a variety of problems. Now, when you look at these examples I've just given for failure, you might notice that they can be overcome. You can pay for market research that tells you what's on the minds of your customers. You can completely rebrand and create a unique value proposition for your brand to stand out. And you can overcome poor management by going on training courses or seminars, etc. However, you can't do those things when you don't have enough money to solve those problems. You can get past many of the common problems when you have enough startup capital to launch your business. In this episode, I'm going to go through several different options to find the money you need to start and grow your business. So if you're ready to get the capital necessary to move your business from a dream to a reality, then let's go. Welcome to the Elevate Your World podcast. This podcast is for anyone who wants to take their business to the next level. Each episode tackles a topic relevant to entrepreneurs and those looking to start a business. I share tips and tricks on how you can grow your business, find success, and elevate your life. I am your host, Jules. It's going to take a while to establish a presence in your industry. You can't reasonably expect to have a grand opening today and have your business become successful by tomorrow. Well, it has happened. But those are the exceptions to the rule. Some venture capitalists and serial entrepreneurs that are really good at what they do will tell you that you need at least 3 years of operating capital before you start your business. This gives you a solid chance at developing a business that can make it through the early growing pains. However, while having enough operating capital is crucial for the survival of a new business, the specific amount needed can vary widely depending on the industry, the geographic location, and so many other factors. So 3 years is not a hard and fast rule, and the amount needed may be more or less depending on the specific circumstances of your business. There are plenty of ways to fund your business or your startup, from using your own money to bank loans and small business grants to the not so traditional. Sometimes keeping an open mind is the key to spotting unique but practical ways to generate the capital you are going to need to launch your business. The list I'll share contains more than a few options for you to access the money you will need to start or grow your business. In episode 28, I covered starting up a business with your own money, which could be any of these, from your full-time job, a part-time job, this is in addition to your full-time job, your savings, a windfall, like a bonus, an inheritance, or even a lottery win, or selling your belongings, maybe your car, some clothing, some jewelry, gadgets, all those things, or, maybe even just downgrading your car, and credit cards, which is that's a bit of a last resort one, but credit cards as well. Now, these 7 suggestions I'm about to give you are for funding your business from external sources. First one is grants. A grant is basically money that doesn't have to be repaid. The government accepts personal grant applications on the gov.uk website. So depending on your heritage, race, cultural background and other things, you may qualify for a personal grant you can use to fund your business startup. And many other countries other than the UK likewise can offer grants for a wide host of reasons. Your small business may also receive funding in part or in whole by grants offered by schools, local governments or privately owned institutions and businesses. 2. Crowdfunding. Crowdfunding has become increasingly popular in recent years as a way to raise funds for your business. This method involves reaching out to a crowd of individuals, hence the name, for funding rather than relying on a single institution or individual. This approach can be particularly attractive to individual investors who don't have a lot of money to invest. For instance, if you have a groundbreaking idea for a new piece of technology but lack the necessary funding, you could offer multiple crowdfunding investors the chance to own a small part of your business without having to invest a huge significant amount. This can quickly generate a considerable amount of capital, as it's easier to attract many investors contributing smaller amounts than it is to secure just a few large investments. There are platforms such as Kickstarter, Fundable, Indiegogo, and these are all reputable and respected within the crowdfunding community and can help you benefit from the power of crowdsourcing to fund your business. By explaining your plan in details and offering attractive rewards, you can persuade a lot of people to invest, especially when they only have a small amount of money to risk. Number 3, sponsorship. If you're running an event, whether that's a one-off event or weekly, monthly event, obtaining sponsorship from corporate businesses is a great way to get the money for your event. With the sponsorship deals, it's a win-win situation. You get the money you need for your event and the sponsor gets the exposure they need for their business. There are usually different levels, for example, silver, gold, platinum, like that. And the platinum sponsor usually has the biggest coverage during your event, or known as the main sponsor. 4, angel investors. An angel investor is an individual who provides capital for a startup, usually in exchange for convertible debt or ownership equity. Angel investors typically provide funds at the early stages of a business when there is high risk and potential for high reward. They're usually entrepreneurs themselves and have the experience to help guide startups along the right path. Angel investors provide not just money, but also mentorship and advice to help businesses succeed. They can also provide access to networks that may be beneficial to the business's success. And here are just a few websites you could visit. There's Angels Den, Funding Circle, or Angel Investment Network. While these angels can provide capital to help get a business off the ground, they may also require entrepreneurs to give up equity in their company or follow a specific business plan. Therefore, it is important for you to carefully consider all the potential risks before seeking out angel investments for your business. Number 5, venture capital funding. Venture capital firms, VC, might make sense for your business, and companies that offer VC money for business startups often focus on a particular industry. In some cases, you may find a VC firm that is open to any type of project as long as you can provide a detailed business plan. Generally speaking, though, entrepreneurs turning to VCs need to raise a significant amount of money. And bear in mind, there are many VCs that usually don't want to even get involved if you're looking to raise anything less than like 100 grand to start your business. And there's some, I think there are even some that they won't even talk to you if it's not even $1 million. So yeah. 6, bank loans. Now, banks and other traditional lending institutions can offer small businesses substantial capital, often with attractive terms and interest rates. If you are starting a brand new business, your bank is likely going to make the lending decision based on your personal credit score. This means that your personal finances can become entwined with those of your business. And this is not always the best move to make. But if you do have a near perfect credit score and a good relationship with your bank, a traditional loan might still be a good way for you to secure funding. And the last one, number 7, family and friends. I saved this one for last because it really should, in my personal opinion, it should be a last resort. I'm sure you've heard plenty of horror stories about people who borrowed money from their mum, their dads, family members, and it just caused so many problems. This is why you should get everything put in writing. Yes, even if it's your mum, get things put in writing and signed in front of witnesses. And you need to be clear on what is a favour or a gift and what is actually a loan. Imagining a best case scenario is easy to do when people you care about are involved in your business. However, nothing is guaranteed in the business world, and you could end up ruining important relationships while simultaneously watching your dream business fail. Right, there you have it. So only when you are absolutely certain you've taken every possible business expense into account, then you should move forward to seek funding. And think long and hard about everything your business is going to entail. Perform your due diligence and create a solid business plan. Definitely do not think in the short term, and factor everything that you'll need to finance your business for at least 6 months to 1 year. And when you follow the recommendations in this episode, you should be able to find the money necessary to launch and scale your business. Thank you for listening to this episode. I'm happy to let you know that we have resources for this on our website. We have templates for business plans, pitch deck templates, spreadsheets, a list of resources that I've mentioned in this episode. So please do visit elevatestudiok.com/resources. Thank you for listening to the Elevate Your World podcast. Until the next episode, keep elevating.